Good morning, all. I'd just like to introduce you to Charles, who's here beside me. A lot of you may already know, one of the advisors at DMG Financial Planning. I'm Ben Lancaster, if you don't already know who I am. And Clayton Larkham from Pack Capital. Welcome, Clayton.
Thanks very much.
Very good. Probably the main point of it is to get a bit of an update on what's going on in the world and what we see is going to happen in the next coming 12 months, but also just to introduce Clayton, who from Pack Capital, who has recently purchased Clearwater Portfolio Management. So, which obviously Clearwater have been a big part of our portfolio structure and design with Gary, Lucas, Bart, Steph, and Brooke from Lonsec. So from our point of view, we just want to introduce Clayton and just let everyone know that through the process that Pack have purchased Clearwater, we've been heavily involved with the vetting process of this because we have to be very comfortable with working with Clayton and his team or whoever bought Clearwater. And also for our clients, it needs to be the right fit as well. So I think from my point of view, it's been a really good succession to Pack. Pack have a commitment to, essentially it's just meant that we've now got even more firepower on the committee. So we've still got the advisors such as myself and Charles on the committee. Gary's still there, Bart Dowling's still there, Steph Williamson's still there, and Brooke from Lonsec's still there. So we've still got the same team intact, but we've got the addition of Clayton and Seb and his team at Pack Capital. So the portfolio has been no real change. It's really just a case of adding a bit more firepower to it. And to date, it's been really, really happy with where it's been going with our committee meetings, robust conversations, which is really, really good. So, and that's what you want as a client, to know that you're being well looked after behind the scenes on a daily basis, which is what is happening. So, so what I might do is just hand over to Charles, and he'll just ask Clayton a few questions around the environment in the world, and you get to know Clayton a little bit. So over to you, Charles.
Yeah, thanks, Ben. So Clayton, I'd love to hear a little bit about you, your story, and Pack Capital. Can you start there with a bit of an introduction?
Yeah, sure. Thanks, Ben and Charles. It's been a good end to the year. As Ben sort of touched on, it's such a nice integration between Pack and Clearwater, and I think of it as not really more of an acquisition, but a merger of both of us. We've got the team remains the same there at Clearwater, and what you guys have done and supported on over the years has been amazing. We're just adding in, as Ben touched on, a bit more firepower. We've got quite an extensive team here in different parts of investment and macro thinking and positioning portfolios, and we're stronger together, as a group. So I think it's been a really nice addition, and I've got to know Gary pretty well, very well, over 2022, and he's such a great person, and couldn't have got into business with anyone better. And Ben and Charles, I've got to know these guys over the last 6 months, and what a great business DMG has there. And you guys, really, what I learned was that you care so much about your clients and want the best results for them. And you were so diligent in really inside to look at who's the group that's going to help in the control of the portfolios. And you guys were the main sort of how do you say it, the main gatekeeper to the whole transaction. So we've got a really good relationship, and I think it's going to be a long time to come, hopefully. So that's sort of a bit about what's happened, and a bit about me. I'm obviously the founder and the chief investment officer at Pack Capital. Pack Capital is very similar to Clearwater. We're an investment management specialist firm, where our main focus is in this diversified, big macro portfolios that very similar to the DMG diversified portfolio that you run currently for a lot of your clients at DMG. Now, we do a very similar work here at Pack, and that's why it was such a nice, essentially a marriage of both of us, because we could come under the same hood, share our research, and have the team goes from, 4 people to 14 now together. So, it's a really nice, a nice synergy. So I spent a lot of my time in Hong Kong. I was over there for 10 years working for the big US banks of JP Morgan and Morgan Stanley. I wanted to come home to Australia, where I'm from. Sydney's obviously outside of my window there, but I'm actually from Dubbo in the country, where I was born, and I've got all my family's here in Sydney, so it's nice to come home, and I really had a drive to do something a bit different in Australian funds management. I feel like there's a lot of industry funds and super funds, and there's a lot of investment that people are looking for a bit different way to invest their money. And I'm not talking about a different investment, but just giving people a bit more of a transparency on what they hold, what they own, and having a really good relationship with, the advisors or the people who are giving the advice to the clients, like Ben and Charles. Like, you guys are the exact relationship that I feel like I want to have. I want to, get on the plane or on calls like this anytime. We can sit in front of clients or do webinars and really start to, even this, what we're doing now is a really good example of, bringing a bit of transparency to me and the portfolios and going from there.
Clayton, I was just going to say it's a really good point, because when we started the portfolio back in, I think it was 2013 when we started, one of our issues was there was a really big dissect between the fund manager who had his mandate to do something, what he's supposed to do, and the actual end client. And this is one of the whole reasons that we set up the portfolio. So that's a really good point, because it's exactly why we set it up in the first place, because that was missing, that bit in between. So, and that's where we felt now we have that, and then we've now got the succession of that with PAC. So that's a good point, and 100% agree.
Exactly. And you guys what you created was at the forefront of rolling out the advice sitting separately to the funds management, and you guys were really early in doing that. And that's something that you guys sit by, sort of separating those two buckets, which we've seen now in, royal commissions and those things. There's sort of you guys were already at the forefront of that. So I heard from Gary when we met and sitting with you guys over the last couple of months, like, you just want to you care so much about your clients, and you want to make sure that the manager is doing the right thing in the right interest for their clients. And you can't get a better interest. You and I speak, whether it's weekly or daily, about positions and portfolios, and it's a really good relationship. So I think we've hit the nail on the head.
100%.
Yeah, looking at the portfolios and the challenges that we've experienced in the markets globally, Clayton, can you expand on the year that we've had and the challenges faced over the course of 2022?
Yeah, look, it's been a pretty tough year around the world. It really has. We've seen a lot of the different asset classes around the world have come under a lot of pressure. Like, one that we hear about in the news every night is, you'll see on the 7 News or 10 News, how did the ASX 200 do today, or how did the S&P 500 do? And that's purely talking about equity markets around the world. And equities is only a small part of the Clearwater portfolio. So, I think that, you should try and, over the course of 2022, you've heard a lot of noise. There's been a lot of noise in the media about markets are falling, and they have. And, whether it's the Australian ASX 200, it's off sort of circa 14%, or you go offshore, you go to America, where those markets have fallen, 20 to 25%, depending where you are. Now, it's really important to sort of look and be, of course we have exposure to these markets, but I suppose what I've come in there and you guys have helped construct and orchestrate over the past years is a lot of diversification in your portfolios, which has helped take a lot of that volatility away. Your portfolios have come under we've lost a little bit of ground compared to the last few years. You know, that's a well-known fact around, and we've done the same at PAC. And you know, but you know, I feel like the Clearwater portfolios are in a really strong position because you guys have fallen a lot less than the market. You guys, you know, the portfolios that have been constructed have been really resilient to these falls in equity markets, which has been great. You know, and what are the things that have made the markets fall this year? Obviously, inflation has been a big one. You know, we've seen the cost of goods go up around the world. You know, I'm trying to renovate an apartment at the moment, and you know, the cost of a carpet I'm trying to do has almost doubled in 12 months. You know, like, so it's just the little things. Like, I go to Woolworths last week, and when did I spend $200 on a quick shopping? You know, like, it's just the cost of goods have gone up around the world, and that's causing a lot of pressures on, is my salary, is my wage that I'm getting keeping up with the cost of goods around the world? And that's causing a lot of pressure around the world from, you know, governments or central banks which control this money. How do we sort of help the economy? How do we bring this inflation number down? How do we bring the cost of goods down around the world? And that the way they do that is by increasing interest rates, which we all know has been happening in 2022. So, you know, increasing inflation is on the rise. Governments have tried to control that by increasing interest rates, and you know, that's put pressure on a lot of asset classes around the world. So I think that's been the main thing for 2022, and it's probably going to keep going into 2023, I feel.
That brings me to the next point. Obviously, inflation's been the buzzword for 2022. Something, as you mentioned, that we've all felt. Everyone's felt the impacts of inflation. Do you see it being a brighter topic in 2023, or where do you see inflation going? Because it's something that we're all asking ourselves, and something that clients are asking as well.
Yeah, look, it's a really deep question that we spend a lot of time on. We spend a lot of time on, and we've discussed it in our investment committee meetings a lot about inflation and how do we position portfolios, you know, given what's ahead. Now, I don't think we saw the Fed. The Fed is in the US, which you guys know well, that the Federal Reserve over there controls interest rates, just like the Reserve Bank of Australia does here. And last night they raised interest rates again, trying to, you know, again, bring down this inflation. Now, where do we see it? There's a lot of different schools of thought here. And, you know, a lot of people feel like there's a big recession coming. And I'm not going to deny that. I feel like there is a recession indicators around. And I think we need to position portfolios and ourselves for there could be a further 20% fall in markets around the world, and some tougher times ahead. But you know, at PAC, and I know at Clearwater too, when we've had these discussions, which is all part of the same group now, PAC, Clearwater, it's the same schools of thought. You know, we're probably a bit more positive on the outlook into the second half of last year. You know, it's been a pretty tough year around the world, and you know, people have felt the pressure around. There's a lot of interest rate rises, and you know, I feel like the first quarter and first half of next year will continue to be almost plateau out or a little bit down from where we are. But the signs to us point to we could stop raising interest rates and find some stabilization over the middle of next year. And we actually feel like the back end of next year, it's going to be a positive scenario globally. You know, that's how we position.
That's positive to hear, Clay. And I guess the one question, a lot of our clients are obviously invested in the DMG diversified portfolio, the Clearwater dynamic portfolio as a we. How do you feel they're positioned to cope with the challenges of 2023?
That's a really good question that we seem to talk about as a group a lot, and the portfolios. Like, as I touched on before at the start of our conversation, the Clearwater portfolios are actually really robust. They have a great asset allocation. There's a pretty heavy pretty heavy allocation to some alternative managers. And that's the difference. This is what I like about the portfolio, and we like as a whole, is there's not a lot of correlation in the portfolio. And what I mean by correlation is all that noise that you hear on the market, on the news every night about the ASX is up and down 2 or 3%. The DMG diversified portfolios, they don't follow as much correlation that you hear in the markets because of the diversification in the portfolio. There's a really great allocation to some healthcare funds. There's an allocation into some listed property and some private equity ventures, and also some fixed income managers that are a lot more stable through these volatile periods. So, as a summary to your question there, Charles, like, I feel really positive in the way that DMG portfolios and diversified our position. I feel like as a group, you and I have all talked about, in January next year or February, it's time to start to put a bit of risk back on, which means we should start to add a bit of more equities to the portfolios, because in the back end of next year, we see the market sort of growing again around the world. And we don't want to miss out on that. We want to capture that for all the people that are in diversified, and we've been really resilient in not falling as much as other times, but we also need to remember that we also need to capture the upside as well in good times. So I think the portfolios, we need to be a bit more active, we need to be nimble, and we need to be responsive to global conditions that are happening around the world, which we talk about a lot. So,
and probably on that, Clayton, I mean, that's one of the things that we often talk to clients about, in that by the time you feel warm and fuzzy about where things are economically, the markets have already factored that in and have gone up. So I think it's really important in what you're saying there, is that we don't want to enter that sort of place too late. So I think exactly what you're talking about is, like, from an advisor point of view, talking to clients, I think that's really important for us, that you're already thinking that that side of things, because invariably it happens before everyone, the mums and dads and buying groceries down the supermarket feel good about it. It's already the markets have already done their work, so factor that in. So it's good.
Exactly right. And we feel like this middle of next year, the world will start to feel better and kick away and grow at a good rate again. And we don't position that in the middle of next year. We need to position that early next year to get set, because as you said, Ben, we might miss out on that. We don't want to do that. And, what I love about, working with the DMG group is how we can get on a call. We had an ad hoc meeting in November. We meet every second Tuesday, but we'll call a meeting and say, we want to add this fund to the portfolio, or we want to lower our fixed income or equities. Like, if something's happening around the world, we all get on a call straight away. I think we don't wait till the quarterly meetings. If something needs to happen, it happens now.
We have had a past where we had an investment committee meeting on Christmas Day, I believe. So
I'm happy to call you on Christmas.
Well, sometimes it's good depending on what part of the day it is.
I know the feeling. So look, in summary, I think we're in a good spot for the year. I love the way the portfolios are positioned. I really feel great that we're so close and we're transparent, and we all know every part of the portfolio, and we can pick up a call and make decisions quickly. And I think that's what we can improve on this year. It's going to be more and more volatility and more news out there. And we've got some great minds and some really great thinkers all here now as a group. We need to make decisions quickly in the best interest of your clients, which is the main reason.
Very good. And Clayton, I guess from our end, as we know, 2022 has been a massive year with Russia and Ukraine and China and Taiwan and inflation and interest rates rising and supply chain issues, tail end of COVID. It's been a really big one, but I think the positive thing that I'm taking out of today's conversation is that we've made a very good decision in partnering with you, and that relationship with PAC is only going to bolster our resources and our ability to serve our clients. It's great to work with you, but also to have, you know, Gary, Lucas, Bart Dowling, Steph Williamson and Lonsec continuing on the committee. It's great to have the robust discussions that we have, but just having that extra resource to find opportunities for our clients, and we get that through PAC Capital. So we thank you for that, and we look forward to 2023. I'm glad to hear that you feel that, you know, we're going to move into a little bit more positive territory in 2023, and I'm sure our clients are looking forward to being well positioned to participate in what 2023 brings. So thank you for that. And before we close off, I just wanted to also thank someone very special to DMG, and that's Gary Lucas. So Gary, as we know, has been involved with DMG forever, and Gary has been intimately involved with Clearwater portfolio management, the DMG diversified portfolio, and the dynamic portfolio. And he's going to continue to be involved as well, which is, we want to get that point across. Even though Gary's a planner and he's managing his succession very well, he's committed to continuing to help the committee and be a pivotal member of our investment committees. So I want to take the opportunity to thank Gary for all his work. He's much loved by DMG team here and all past and present clients. So thank you, Gary, and we look forward to working alongside you, Steph, Clayton, and the rest of the team there at PAC Capital.
Yeah, and also just on that too, we just want to take the opportunity to thank clients. Yet again, it's been a pretty tough year, and say Merry Christmas, and we certainly look forward to the year ahead and continuing to work with everyone. It's been you know, great year. We enjoy what we do, and we're always happy to do it. So Merry Christmas, everyone.
Merry Christmas.
Thanks, Charles. Well said there on Gary as well. Charles, he's I don't know him as well as you guys over the course of the DMG period, but you know, he doesn't leave the structure here. He's very well entrenched still within the Clearwater structure, stepping back on more of the day-to-day side and the investment committee duties, but he's an integral part of my day, and he's a great person. So I look forward to working with you guys too, and your clients, you know, for a very long period. You know, I've got to know both of you, Ben, Charles, very well over this year, and you know, your clients are in great hands with you guys. You've got a great business and great ethics, and I'm proud to be part of it. So thank you.
Thanks, Clay.
Thanks, Clay. Thanks for your time.
Cheers, man.